Good day, and welcome to yet another one of our Rand Swiss Weekly Wraps. I am Viv Govender. This week we're going to cover the Fed decision, the US Fed decision, Trump's meeting with Xi Jinping, and then we're going to look at a bunch of earnings results from Amazon, Microsoft, Meta, and Alphabet/Google. Okay, so let's look at first the Fed meeting. The Fed decision. The US Fed cut interest rates again, despite as they claimed they were flying blind. What do they mean by that? Well, at the moment, it's very difficult to understand what's actually happening in the US economy. The overall economy seems to be growing reasonably fast, but there are signs that the job market is under a bit of pressure, labor market is under pressure. Inflation came in last reading for CPI was about 3%, slightly below the 3.1% expected, but still well above like the 2% target. In this environment, the Fed really doesn't know what is the move forward. Is the market too strong? Is the economy too strong? Do they really want to be cutting interest rates into a strong economy that may be having inflation still well above the target rate? Or on the other hand, is the labor market, falling enough, weakening enough that it's going to cause trouble going forward? Now, we've saw a lot of numbers coming out from some of these companies this week. We'll talk about that later. But also we saw reports of it was job losses. UPS firing tens of thousands of people, Amazon firing about 13,000 or so people, and possibly going up to much 30,000 in total in the end. This is a move that we are seeing kind of echoing throughout the entire US economy at the moment. Strong growth, but lots of job layoffs. Why? In one word, AI. There's evidence out there that CEOs, whether based on reality or based on perception or trying to follow a trend, believing that artificial intelligence and some of the automation stuff that's coming through will allow them to actually produce as much as they have in the past, while still cutting or reducing the labor force. That is, at the moment, I think an unproven thing. Yes, we have AI improving quite fast. Yes, we have evidence that we are going to be seeing that improvement continue into the future, but is at the current point in time good enough to replace a number of jobs? I would say no. It may augment a few people here and there, but it really is not, at the significant job replacement level as yet. But what I mean by the trend in terms of improvement, well, one of the best measures, or recently, pretty popular measures for AI is how long can it perform a task for and get a reasonable chance of not getting off track effectively. That amount of time seems to be doubling every few months. So it's more than doubling every year. Now, when something doubles more than once every year, that is a very, very fast rate of growth. You can imagine in 5 years' time, if it doubles twice a year for 5 years, okay, you start with 2, you go to 4, you go to 8, okay, you go to 16, that's after 2 years. You're going to basically 64, plus 128, 256. It's over 1,000 times faster after 5 years. Okay, 1,000 times more time rather, not 1,000 times more time in this scenario. So even if you started off with 1 minute of unsupervised, performance at the start, 1,000 minutes, that's a long time. Okay, 1,000 minutes is like a day. You know what I mean? That is a huge amount of time, a full day, like almost 3 hours. That is most jobs don't require that amount of unsupervised, uninterrupted labor. So if you can get just from 1 minute of actual performance at the start to have a day worth of performance, 3-hour period of performance at the end of 5 years, you are replacing people in 5 years. There's no doubt about that. So that is something to be looked at as well. So not yet at the point where the labor force can be replaced, but at the current rate of performance improvements, that will probably happen within 5 years unless that rate changes. Okay. Now moving on to the Xi Jinping Trump meeting. So Xi Jinping is the leader of China. Trump, of course, the leader of the US. The meeting, they're trying to basically get a temporary truce around the trade war. And I say temporary truce because I don't think that the fundamental stumbling blocks between the two countries, between the US and China, is something that can be solved by negotiations. This is a battle between two powers that are trying to be the dominant power in the world. You can't have two number ones. You know what I mean? You can't have Usain Bolt agreeing with his rival to win the 100-meter race, or negotiate who's going to win the 100-meter race. Both want to win. It's the being on top is the important. So they may have a temporary reprieve right now, but in the long term there is going to be conflict going forward. So what has been the dynamics of this particular thing? Okay, Trump of course coming out and having his tariffs against China. Historically, that would move the Chinese to weaken their position and kind of bend to the Americans. But this time around, the Chinese are basically standing up a bit stronger. Why? They're larger than they were in the past. They're growing faster than the US. Maybe not as big as the US in terms of nominal GDP. In terms of actual, manufacturing capacity, economic capacity, I would argue they are as large, if not larger than the US. Yes, the US may have a larger GDP number in whatever, but a lot of that number is for things like yoga teachers and services. The Chinese GDP number is made of more things like building ships and building cars. Okay, and if you let go into a real conflict between two countries, the ability to build ships and cars makes the ability to build battleships and tanks, whereas the ability to build yoga teachers and hairdressers, etc., doesn't really translate to war as easily. But moving on, the Chinese economy right now has, over the last few years, been disengaging from the US. At one point in time, a few years ago, the Chinese export share to the US was something like 1 in 5. Now it's closer to 1 in 10. Okay, so it went from about 20% to 11%. Okay, of the export share went to the US. That's a huge differential. Okay, especially because of the fact that the US economy continued to grow, quite strongly over the period of time. So the Chinese are less reliant on the US from that point of view. On the other hand, the Chinese have gone out and gotten control of strategic areas of the economy. One of the things they've gotten control of is something called rare earth minerals. These are not particularly rare, but they're quite dirty to mine. And the Chinese basically sacrificed their environment, sacrificed the health of their population to a certain extent, and got almost monopoly control over this. The US could produce it if it wanted to. It really had the need to do it. But the environmental and other impacts on it are just something it doesn't want to be involved in. So the Chinese got control of it. Why is this important? Well, these things are really important for a bunch of electronics, especially magnets. Why are magnets important? Well, magnets make motors. The way you make an electric motor is with a magnet, one of the important things. But there's also a number of other electronic areas, areas of electronic manufacturing that require these minerals. If the Chinese basically were to stop exporting it, it would cause a real shift in how people will have to function globally. It will take some time for the world to adjust to that. One of the other things they've done is quite strategically start buying things like soybeans. Why soybeans? Well, a lot of Trump's support comes from rural America, obviously. The cities tend to be more democratic. The coasts tend to be more democratic. The center of the country tends to be more Republican. If you look at a state-by-state breakdown of who votes Republican, who votes Democrat, basically on the coast you see a lot of blue, in the center you see a lot of red. Red being Republican, blue being Democrat. And so a lot of the farming states basically are voting Trump. Soybean, farming is a big a part of that economy. And therefore, if you were to stop importing soybeans, especially in a quick turnaround, it would really negatively affect those farmers. And it basically was a way to cleverly push a pain point for the farmers, and therefore translate it over to a pain point for Trump. The Chinese have done a number of other things as well, some interesting things. For instance, I just went to a conference with the Chinese ambassador, and he was talking about the fact that China is looking to effectively unilaterally drop tariffs against South Africa. What does that mean? It means no tariffs for us to sell to them, but we can keep our own tariffs up if we wanted to. That's a pretty good deal on the face of it. Compare that to Trump, who is talking about having 100% tariffs against some countries around the world. That is a very different kind of approach to things. In the short term, that might be a bit painful for China. It's going to obviously mean that the people place more competition without being able to export to other countries. But I think the Chinese, manufacturing capacity and strength is quite strong. I mean, we are not really going to be able to export, iPhones to China. They're always going to be the one exporting iPhones to us, because they have the manufacturing capacity which we'll never match. But over the longer term, what does this mean? Well, if South Africa keeps on, having tariffs from the US side and no tariffs on the Chinese side, where are exports going to go to? To China. That means China is going to be a bigger and bigger part of our economic world, and the US is going to be a smaller and smaller part of that world. The Chinese also are very careful about not trying to push any kind of political interference in any economy they're dealing with. I was there, and a student asked a question about, what is China's advice about fighting corruption? Because China's obviously had a big anti-corruption drive in the last few years with the Xi Jinping coming to power. One of the first things he did was go after really high-level officials that were seen to be corrupt, and the Chinese ambassador was basically, we will never talk about your political environment ever. They are very, very careful to never ever go articles and talk about other countries' internal politics. Compare that to Trump, who was giving passports or visas rather and refugee status to South African Afrikaners because of what he perceives to be political persecution in South Africa. That's a very different environment. You play that out another 10, 20 years, and I don't see how China is not a bigger part of South Africa's and much of Asia's and South America's economic sphere, and how the US is not a smaller part of that sphere. No matter who you are, no matter what your political leanings, you don't really want the US to basically be meddling in your internal politics. The Chinese say they'll never do that. Obviously, that gives you that automatic, favorable view of the Chinese. And at the same time, the Chinese basically trade as much as you want with us. We won't even push any kind of things back at you. Whereas the US basically sees anything other than, it's called a flat, it's called trade deficit between the two countries as being unfair. So it can be in favor of the US, that's totally fair. It can be equal US to you, that's fair. It can never ever be the other way around. That is not exactly, a recipe for endearing other countries to you, and definitely not a recipe for them wanting to be trading with you more into the future. So that is, what's happening there. Like I said, probably will get a temporary truce between the US and China going forward, but it may not last very long. The Trump administration has got another 3.5 years to go, almost 3.5 years to go, and I don't think he's going to be willing to just sit on his hands if any kind of deal is done at the moment. Okay, now moving on to some results. So, firstly, let's start off with Alphabet. Great results from Alphabet. Alphabet is the parent company of Google, YouTube, etc. They make things like Gmail. They make the Android. They do Waymo, the driverless cars. They have DeepMind. It's basically the almost everything company in the tech sector. Now, they have been really innovative, and they've often had a great, record of being the first to do something, but often they don't have a way to monetize it. In fact, till this day, their number one source of revenue, in fact, almost all, if not all, their profitability, net profitability, comes from that search bar. Okay. And by the way, the search bar, which people had thought was going to be under pressure from AI, and which probably will be under pressure from AI going forward, grew quite nicely. Revenue grew nicely. It also had good results from YouTube and a couple other things as well. It broke $100 billion in revenue for the period, which is the first time it's done that. But the big thing that people saw that was really positive for Alphabet was their cloud services really taking off quite nicely. The demand for AI seems to be really stronger than some people had anticipated, and that's feeding really strongly into Alphabet's results, and that's resulting in the share price actually running up on that day when the results came out. Next, Microsoft. Microsoft had slightly worse results than Alphabet. The market reacted negatively to it. Concerns about some of its AI spending, and some of the ability that it has to basically translate that spending into revenue is being concerned there. Meta had the worst results in the market's view, falling dramatically on the news. I think it's a bit unfair. They had the same kind of concerns around Microsoft around, basically the AI spend. Also, they missed estimates, but the reason they missed estimates was a once-off tax charge. They say it's a once-off tax charge. You take out that tax charge, that once-off thing, and it would have beaten expectations. Okay, so I think it was maybe unfairly punished, but it was definitely the worst performer. Then, in terms of the best performer, actually, at the moment, is Amazon. Amazon also had results coming out. Again, the market focused on their Amazon Web Services, their cloud business, which seems to be doing really, really well. They're the leader, by the way, in the sector. and the market has, like I said, reacted positively. Amazon Web Services, by the way, is like the more important part of Amazon. If you compare it to Amazon Web Services versus, for instance, their retail division, it's more important in terms of like how the market perceives things. So it's done reasonably well, and the market's reacted positively to it. So we've had results coming out. One reasonably good, one reasonably bad. Apple, it goes Microsoft reasonably bad, Alphabet reasonably good. And then we had, of course, Amazon reasonably strong, and Meta reasonably bad, well, quite bad actually, in terms of how the market perceived things. I just do think that Meta's negative reaction may have been a bit overdone. Now, one final thing before I go, this is a little addition to the end. There was a report that some company out there is producing robots for sale, household robots. Great video and very impressive, kind of like whatever. I still think robots are a bit away from where we are right now. The LLM technology we have doesn't really adjust itself to how robots work. We just don't have the database, the data set to work with the physical world at the moment. And so if you look with any kind of depth into it, what you find out is the actual hardware is quite interesting. They're using like tendons, to move the joints and so on, which is probably a little safer, a little more give in terms of how things work. They are, it's like cloth covered. It looks, more friendly than like the hard shell of like an Optimus. But if you look into any depth, like I said, into it, the hardware is there, the software is nowhere near there, and all the demonstrations that you've seen have been remote controlled humans, about humans. So every like thing where it's like packing clothes or interacting with like the germs or whatever, that's all being remote controlled by a human operator. And so I would think that this is just basically one of those things that's a little too early for the market just yet. Okay, that's it for this week. Thanks for joining me. I look forward to speaking again next week. Cheers.